Hi, this is James Shug with Westpac London's end of day report for Thursday, January the 12th. Two main non-events of the day were the on-hold interest rate decision from the Bank of England and the on-hold interest rate decision from the European Central Bank. At the press conference, the ECB President Draghi said that he saw signs of stabilisation in some surveys and at a very low level, and although risks were still very much to the downside for the growth outlook and balanced for inflation, there was a unanimous decision to leave interest rates unchanged today. Now, that doesn't preclude a further move downwards in interest rates from the ECB at some point. In fact, we think they will move within the next few months. But for today at least, it provided a little bit more comfort, I think, for financial markets, as emphasised by bond yields in the European bond market, which were a little bit lower today. And some of the peripheral European governments managed to get away bond issues at much better rates, lower rates, than they had just a few weeks ago. That contrasted with the US, where we saw weaker than expected retail sales and initial jobless claims reports. Jobless claims jumped back up to around 400,000, up around 25,000 in the latest week, and retail sales, particularly excluding cars and gasoline, were flat in the month, which was the weakest outcome there since the middle of last year, middle of 2010 actually. So retailing lost some momentum in the US in the last part of the quarter just finished. Those developments saw a bit of a shift in currency markets, where the euro actually appreciated against the US dollar and against other currencies as well. In terms of other news today, we saw European industrial production down 0.1% in November. That was the third consecutive monthly decline in a row, the first time we've seen that since early 2009. So that was when the European economy was still in recession. So although there were some positive signs that Draghi referred to today at his ECB press conference, we're still getting hard data showing that Europe is probably entering recession now. UK industrial production also was weak in November, down 0.6%, with the factory sector contracting for the second month running, and oil and gas output and also the utilities dragging the overall number down even further. So there was a lot of pretty weak economic data today, and also Chevron in the US reported weaker profits in the fourth quarter because of less refining activity. So all up, it wasn't a particularly brilliant news day, yet the movements on the markets were pretty mixed. We've got, for example, the FTSE at the close down just 0.2%. The French market down 0.2% as well. The German market, however, up 0.4% today, and the Italians did very well with a 2.1% rise on the Milan stock market. At about 5 p.m. London time, the Dow in the US is down around 0.25% at 12,414. On commodity markets, we've got copper prices up 2.7% today. Oil prices are up 1.2% at $102.12 a barrel, and gold prices are up 0.9%. That's at $1,654 an ounce. The Aussie dollar, a bit of intraday volatility, but sort of more or less steady against the US dollar today at 1.031. However, there's been a clear pullback in the Aussie against the euro from 81.4 euro cents yesterday to 80.4 euro cents today. That seems to be a bit of a turnaround and a long-term appreciation in the Aussie against the euro, if you look at it on a chart. That's probably the main news for today, I think. I'll call it there. Thanks for watching. That completes, I think it's now 6 months of these video casts. I hope you enjoy them. Thanks Mum and Dad for watching. Thanks Craig in Birmingham for your kind comments. We'll be doing these for many more days to come, I hope. Okay, thanks for watching.